So I suppose just to kind of provide a brief update on the international commodity markets, we're looking here at this slide. We've tried to condense basically the first, what's that, sort of 5 months or so of 2022, looking across the EU and UK ETS carbon markets, a bit on Brent crude, and also the spot Asian LNG market, which is very topical, as Tim's kind of nicely pointed out at the start there. So in no particular order really, but I'll start with carbon, I suppose, just to bring people up to speed with what's happening in those respective markets. So carbon markets across both the UK and the EU ETS schemes have broadly remained relatively high, at least against 2021, but have experienced some notable volatility in recent months. And that's probably a likely response to some of the wider uncertainty across, the European wholesale energy landscape at the moment. And that's something that we'll refer to quite frequently in today's webinar. I suppose in the last fortnight, more recently, we've seen carbon prices benefit from periods of low wind outturn. So that generally places quite increased reliance on gas-fired assets to effectively bridge that demand gap in response to kind of lower renewables output. So we've seen increasing EUA demand and prices rise in turn. And I think the chart, under EU and UK ETS carbon, that kind of nicely highlights that kind of relatively strong period of growth, but also, in the last quarter, we've seen some very, volatile prices, some strong fluctuations in prices on any given week. So a very, very interesting market there at the moment, but certainly very buoyant and much higher than the year prior. Moving on to Brent crude, a fairly similar story really. So Brent crude prices have reacted fairly strongly to the conflict in Ukraine. And again, this kind of idea of ongoing uncertainty around future supply concerns with things like fresh sanctions and embargoes placed on, Russian crude exports from places like the UK and other EU member states and the US as well. Just to kind of put some weight around those kind of elevated prices. Prices at the moment are floating around anywhere between $105 to $110 a barrel, with some significant swings in prices on any given week as well, feeding into that kind of volatility, and reached an 8-year high on the 8th of March, close to $127 a barrel. So again, a very lofted market there. Moving on finally, just to a brief update for LNG for the first portion of 2022. Prices again, perhaps unsurprisingly, very, very much elevated on levels seen last year, and I think around 239% higher than the same period of 2021, so very, very high prices at the moment. Predominantly, that's driven by the global demand for LNG, which remains very high, and LNG, more generally, is increasingly being called upon to manage, the potential shortfall in supply from Russian natural gas. Naturally, the higher demand places higher or upwards pressure on the spot market. And in turn, we've seen inflated prices for cargoes, and we've seen some effectively quite deep prices for cargoes being secured, and sometimes those cargoes heading to Asian markets where they're prepared to pay the slightly higher cost premium. Although we actually, as the UK and EU are starting to receive a steady stream of LNG cargoes from further afield, such as the US, Qatar, and other parts of South America. But I'll touch on that in one of the other gas slides. So if we could just jump forward one, please, Tim. Thank you. So again, what we've done here is just to provide quite a condensed summary, really, of our views for commodity markets going forward. So I think the key messages here really is that we expect the continuation of elevated international commodity markets across the EU and UK ETS, Brent crude, and the Spot Asian markets, as well, Spot Asian LNG markets as well, with the EU and UK ETS remaining fairly buoyant but relatively volatile, given the uncertainty in wholesale markets at present. Similarly, as I've mentioned, the Brent crude market more generally on a global front remains quite tight, which will provide a strong foundation of price support into the summer season. But there are initiatives to combat that. So just one thing to point out is the US is looking to release around 180 million barrels of crude oil from its strategic petroleum reserve over the next sort of 6-month window, which could help soften the Brent crude kind of supply squeeze we're seeing at the moment. So we've tended to side more of a slightly neutral view for Brent crude, but noting it's certainly very much elevated compared to 2021. And finally, on LNG, we've taken a slightly more bullish view, so prices moving slightly further up, particularly just with the importance placed on LNG in the coming months to supplement the shortfall in supply from Russia. I don't think we fully know the full extent of that just yet, or what could happen in the future, obviously. But I think it's likely that LNG will be called upon to meet that supply shortfall as the marginal source of gas, at least in the UK. So it's likely that we'll see higher demand for LNG on a global front, and similarly, we'll probably see prices move up accordingly. As a collective sort of summary of those international commodities, really, it's likely that they're going to remain high, but with volatility and a level of unpredictability in the kind of wider wholesale environment will cause some fluctuation in prices. Okay, so that was a bit of a whistle-stop tour of international commodity markets. I'll move on to gas now. So if we could just jump forward to the first gas slide, please, Tim.